Alrighty, guys. Good morning. Welcome to this Wednesday, May 14th. And we are holding on to our gains. Yesterday we were up here right at the very highs, and then they retraced it to the lower end of the rotation. Not a big range though, 59.25 down to the 95. It's like a 30-point move. But it happened pretty quick in that last 10 minutes of the trading session. So that is what happens. The last 10 minutes could be very tradable if you can stick with it and if you can catch it. Sometimes you have those moves. It is like a bargain hunt or it's a profit-taking run, and they get pretty violent. So yesterday, big move to the upside, continuation. We had that was Monday, continuation Tuesday. Today we're holding on to the gains. We are right up here against the. We're taking out most of this congestion area. We are tracing back up in this upper range right now. Before I get into that news this morning, mortgage applications came out. We kind of a mixed bag, not kind of flat, I would say. We have a couple of Fed speakers. All report at 10:30, and that's it. So not a whole lot of news today. Tomorrow, though, we get a slew of stuff coming out. The jobless claims, PPI, retail sales, Philly Fed, Empire State. Jerome Powell is talking at 8:40. Industrial production at 9:15. Business inventories, housing market. We have a shit ton of news tomorrow morning. That's so you know. Today, not so much. So we'll see how the market keeps, if the market can keep the momentum going on the upside. I think this is well underway right now. They scratch through key resistance areas, and we are on our way higher. So that's what's going to happen. Unless we get some kind of a geopolitical event or something else happens, I think we are trading right back up to the highs again. And we're not that far away. 6150 is pretty close by. We can even see it on the F1. That's how close it is. So we're at the 5900 now. We're taking that out. And I would just stay on the long side of the market primarily. Now, these short opportunities, I tried a few yesterday, and you just have to be very deliberate about them because you're not looking at big rotations. If you want to get on a big trade and sit in it for half a day, you're looking to trade it from the long side of the market. So looking to buy weakness at this point against the 5910s, 5900s for rotations back up. I would maybe look down here at the 5880s as well. If they start taking out the 5900, I would take off the long bias, go back range bound. Still looking to buy against that 5880s, 5870s as well. If they decide to retrace this back down again. Nothing goes straight up. So we have a couple of great days of movements to the upside, taking out key areas of resistance. And this whole congestion area is what I'm talking about. So this whole area coming out is super important. And it doesn't look like we are getting any slowdown just yet in the momentum. So if they can clear this area and hold above it, I would be very, very optimistic that we can head up towards the 6,000 level, maybe even higher. So that's how we get started. Looking to buy weakness on the short side, not going to be very aggressive at all throughout the day session. If there is a retest failure setting up or anything like that, I may look at it, taking it. I would favor the long side of the market. Now the opportunities I think is going to come right here at the 5965s and up here against the 6,000, 6020s. That's where we're going to find better resistance again. So until we get there, I'm not going to be super aggressive on the short side. But once we hit this 59, 60, 65s, definitely looking for a short setup around that area. And looking for a short setup against that 6,000, 6020 area as well. But as you can say, we got a ways to go before we get there. So starting off on the long side, looking to buy weakness, 5910s, 5900s, rotations back up. Below 5900, I'm taking off the long bias and going back more range bound. Looking still to buy against the 5880s and 5870s here for rotations back up again. And if they start tracing back down below the 5870s, well, I'm going to have to start worrying about the short side at that point. But getting early weakness, some profit taking, some algos running it lower, stuff like that, not completely unexpected. And that's why we start with the nomenclature, the wording. looking to buy early weakness. As you see it more, you see the pattern repeat itself over and over again. When they have a bull market or a market that's trading from the long side, more than often you get that right from the get-go, some selling in B and C period, and then they find support, and then you start seeing them recover, and then the day closes towards the upside. So that's usually what happens when they're on the long side of it. On the weak side, when the market is trading down, as you saw earlier on a few weeks back, you got that little early strength, looked like you want to take it higher, and then they start selling and selling and selling and selling, you know. So that's a general dynamic when you have, depending on the direction on the market. So looking to buy early weakness for rotations back up again, and that's kind of we get started on the ES. There's not a whole lot of news to drive the market today. Looking at the Nasdaq and the bonds. Nasdaq and the bonds here. There it is. There it is. So bond market. They were down here against that 12, 16 to 18. We're almost there, that support area. They start taking it out now. I think we are going to be in some trouble. So at this point, they've been slowly grinding this down here to that lower edge. And we'll see if they can keep going. It hasn't been by any means a free-for-all sell-off. It's just been a grind down here towards that lower edge. So I'm still looking to buy against that lower edge, 112, 15 to 18. That's kind of that lower support area. If they take that out, I would start leaning in on the short side. We had a little bit of rotation down here. This is potential area at 114.50, sorry, 111, 14, 15, and then one here at the 110. 10 to 110 20. But if they start down, if they head down below this four little edge, I'm going to be worried about the short side and how far they can take it and how far yields are going to creep higher. So that's an interesting dynamic. I'm not sure quite why yields are going up like that, but it's not a flight to safety for sure. It could be people selling bonds for moving into equity markets, selling safety into equities. And if that's the case, I would expect the bond prices to recover pretty quick. It's not a repricing of bonds. It's more of a selling pressure because people are selling it and rotating back into equity markets. Same as gold under pressure, selling gold back into equity markets. So that could be the dynamic we are looking at on the bonds. And if that's the case, I'm not going to worry about big technical moves or big structural moves to the downside or repricing of bonds. It's going to be more a short term in nature. On the Nasdaq, nice little pop to the upside there, and we are also on our way. And this is going to be, as I said, the Nasdaq was super violent on the way down. It's going to be, it's definitely making a big kick on the way up here. With the big techs are definitely one being bought. A lot of the AI trade is back on, if you noticed. It's after all these AI companies in Saudi Arabia yesterday was talking about AI investments and so on and so forth. So trade that from the long side of the market. Same story at the ES, looking to buy against the 330s. I don't have an edge in between. I could not quite make up my mind, but it could be something here in the 280s. Maybe I should put something in there since I am talking about it. So I can't see, it's not the super good edge, but you see mode of yesterday, so I'm going to include the mode like this. There could be an edge here, all right? So I'm just going to trade that with a bit of caution, but that's the reason I put that level there. So looking to buy against the 330s, potentially against the 280, 290s, a bit of caution there, and definitely against the 240s, against the 190s for rotations back up. I would say below 190s, I'm going to take off the long bias and start looking, go back more range bound. Still looking to buy against that lower areas at 21, 110 to 120, and then down to the 21. You see, need to scroll this guy. Scroll this guy up a bit. There you go. So looking so below that 21, 190, I'm going to take off the long bias. Still looking to buy against that 115s. Against the 21,060 to 70s, 21,000 for rotations back up again. And I would say if they trade below the 21,000, yeah, bets are off at that point. I think at that point we had so worried about the short side. So that's basically taking out this area. Now, if they can't extend a whole lot, because they're coming up against resistance on the Nasdaq here. This is some resistance here at the 21,400s. We can see rotation back to that attractor at the 21,200s and maybe go sideways there. Could certainly be happening. So that is one option for today's trading. But then if they start trading in below that 190s, well, yeah, then they are starting to take out that on the lower edge, and below that 100, 110, 21,110 to 120. Yeah, well, then we are back well below this attractor area, all right? So that's the Nasdaq. Starting off on the long side, let's see how far they can take it. There's definitely two components driving this: short squeeze, people covering short positions, or institutions, that is, and new money coming off the sidelines, rotating out of bonds and gold potentially to get into the to chase this market right now. So because right now it's getting late in the game to chase it. Yeah, I mean, if you're not in now, you're chasing it. You're getting you're kind of buying at the prices a little bit higher than you would like. So, but starting off on the long side, let's see if they far they can take it. Remember, we have an attractor area down here at the 21. It's at 21,200 to 220. A little bit lower right here, so we're a little bit above it right now. Let's see how far it can take it. And then finally, oil and gold. And look at gold having a hard day. Look at that. Oh no. So gold is taking out down here towards the 32,000 again. So look at that sell off. They run it up here to like 730 and then boom, selling, selling, selling. So gold is under pressure, and that's all about the rotation out of gold into equities. I think you see the 3200s, that low volume area that comes out. I think that's we're looking at the rundown all the way down to 3,000 at that point. That can happen. A run down here to the 3,000 level. That can happen pretty quick. So we'll see if they can take out this low volume area. Right now, I'm gonna be looking to trade failure to take it out, looking to buy this area for rotations back up again. But let's be mindful. If they blow through the 3200s, yeah, stay on the short side and see how far they can take it. So those are the two trades I'm seeing in front of us right now in gold. So looking to buy weakness, down that 3200 to 3210s, rotations back up. And if that comes out, you stay on the short side and see how far they can run it lower. Now gold, we're gonna roll gold at the end of the month. So that if you the last couple of weeks left on the June expiration on gold, then we're gonna go to August. So that's all. Come out an email about that later on here. And then finally, oil. And looking at on oil, they traded higher here at given the good news, demand improvement on oil. So trade off on the long side of the market just to get started. But in the overnight here right now, I'm looking at. I would be looking for another retest of this high, the 64 level, but it looks like the upper edge is holding, at least the first time to it. Let's see if we get another retest or if this is going to be it. But if you get another retest of the 63.90 here at the right shadow 64 and it holds again, I think we're going to see a rotation back here to the 62s and then we're back to value again. So right now, trading this higher, and you see the resistance up here is holding, at least the first time to it, and we're backing off a little bit. So at this point on oil, I would still stay on the long side, but only buying it against that 62.70 and the 62.50s for rotations back up. And if this starts trading below 62.50s, we are right back here to the 62, and then we are not going to be back up here and testing the highs again. At least not right away. So that's oil. But if they trade back up again, I would look for short setups against the 63.60s and 63.90s to 64s. These two areas of resistance. You look for short opportunities up there for rotations and back down, and that's back down to value, right? So that back down to this 62 level. So that is oil. Now this is tomorrow is going to be the last trade. I think the 15th is the one last day on this expiration, and we're going to be rolling to the July expiration on oil. All right, so that is oil. Trade that from the long side of the market just to get started, see if we can retest these highs. And on gold, trade that from the short side of the market, but still look to buy against that 3210 and 3200 support areas. They could be, either they could hold, which means we would stay in this upper area. All right, so that's oil and gold. Back to the ES, and right now it looks like we are pretty much holding where we left it. Last little pop here going into the early morning. So Nasdaq is already above the high of yesterday, already extending to the upside, and ES not so much. So we will see how this whole thing shakes out, but not a whole lot of news to drive the market. So we'll stay on the long side at least to get started. Alrighty, we'll wrap it there. So good trading, guys, and I will see you back at 11:30 for the next update. Right, later.